So let's get right to it. What caused the market to go down? I really hope that you learned something new in this video. Please drop a thumbs up and consider subscribing if you feel like we earned it. So the NASDAQ market dropped today due to the Federal Reserve meeting up today, as they tend to do, right, every single Thursday. What was said today, in my opinion, is no different than what has been said for the past couple of months. Interest rates are too high. They want to control, they're going to raise interest rates and they want to cut back on spending. How many times have we heard this? This is in my experience, and again, please feel free to comment down below. In my experience, it's not just about, what is said, because this has been a concern of, interest rates are about to increase. We need to cut back on spending. These have been concerns for a really long time. But as soon as they announce it, then that's supposedly when the market reacts. I find it to be very, convenient. I want to talk about why you saw the NASDAQ market. This is IXIC, which is a NASDAQ index. NASDAQ has a big focus on tech. I'm going to circle back to this. I want you to understand the why. That's my focus with every single video. I want you to understand the reason on the correlation between the news and the reaction of the market. So if they say they're going to cut back on spending, so overall the Federal Reserve is going to cut back the spending into the economy, meaning that, again, to get our economy really going, especially with tech, you have to spend a lot, right? So cutting back on spending, never a good thing. On top of that, if they're going to raise interest rates, the industry, the sector that is always affected the most, and again, please do your own due diligence, is always tech. In comparison to retail, in comparison to every other, right? Tech is always viewed to be the very risky, inflated type of industry. And anytime interest rates increase, the biggest reaction is always with tech. The reason I'm sharing this with you is well, Ricky, why does this serve me, any good now? The market already reacted. It does, because is this going to be the last time that they talk about increasing interest rates? No, right? You live and you learn. That's the whole point of these videos, right? Not only do you now understand that if they raise interest rates, that's a negative catalyst for NASDAQ and tech stocks, but if they lower interest rates, then guess what happens? Tech stocks, again, that can act as a positive catalyst. This is what I like to do. I like to talk about not just, hey, the Federal Reserve said that they're going to cut back on spending and that's why the market dropped. It's okay, but give me more of the bone. Give me more of the understanding of why. So I wanted you to understand why, not just on the technical aspect. Again, I'm very happy today during our live trading session, and all of our Learn Plan Profit members, feel free to comment down below. All I said during today's live trading session, I will not be adding more to my position size. I was trading a NASDAQ ETF until we begin to make higher highs above the 4-hour moving average, or on the day chart, the EMA line. This was acting as a resistance level. We were not getting confirmation and the break above. So I wanted to wait and keep my position size light just in case we got rejected. Trust me, today's drop was more aggressive than I anticipated. But again, I know it's tough to say, but the only people that freak out when the market pulls back are those that did not prepare. Our Learn Plan Profit group, they were all aware. We talked about it during our live trading session today, yesterday, and the day before. I love and I get very excited when the market begins to show signs of a recovery. I'm all about it. You guys have seen my YouTube videos. I make the thumbnails. I get that sometimes it pisses people off because my thumbnails are kind of buy now, right? It's YouTube. But if you ever watch any of my videos, I always explain the why. I always try to look out for you. Although my thumbnail might say buy now, I talk about the potential, but I always talk about position size and the risk involved, on why it's so important to what? To wait for confirmation. So again, there was a couple of tech stocks, blue chip stocks, that I didn't really get to buy the dip on the last time that it pulled on back. What I'm viewing this as is a second opportunity, right? It's not that I have to aggressively buy the dip. It's not that I have to buy the dip and cross my fingers and hope that the market has to recover. I'm presented with a decent deal. I'll take a light position size and I'll ride back the recovery. Actually, I wanted to answer one of the most popular questions on my Instagram today. If you guys don't follow me on Instagram, it's the second link in the description. But one of the most common questions today is, what are the pros and cons of swing trading? Right now, we're kicking off our swing trading challenge. And I have to say, some people might call it a con. Some people might call it, an advantage. One of the disadvantages, in my opinion, and from my experience of what I get to see from swing trading is that, today I could have just locked in profits if it was a day trade, right? But with swing trading, you're holding for a number of days based off of the overall outlook and the overall direction of that specific company, right? Or the specific sector. I'm focusing on NASDAQ. I saw there to be more upside than downside. So I took on the risk of holding something. And again, it's not necessarily going exactly according to plan right now, as things don't always need to, right? But the beauty behind swing trading is that I don't necessarily have to take action every day. And by taking a lighter position size, I can be more rational and collected with my trade. You are correct. It does suck to see that the market pulled back 2.5% today. But again, it's not the end of the world because I have a fraction. I have less than 25% invested in TQQQ of my overall account size. And because of that, think about it. Whatever it is that you're trading with, 25% of that, instead of being 100% invested, you become much more composed. I always talk about position size. It's much easier said than done. Again, it's still emotional, but you just get a little bit more comfortable being able to control that emotion because it's a little bit more calculated. So again, one of the disadvantages of swing trading, I would say, is that when it comes down to things don't always go according to plan right away, it's a time and patience aspect. You almost need to trust yourself. So one of the tips that I wanted to share for people that are just getting started is, well, how do I do this? I might sell too early, or every time I buy, it continues to dip. Imagine you only buy one share. I'm serious. Right now, the market pulled back, right? NASDAQ pulled on back, and look into it. Apple pulled on back. Tesla was one of the biggest losers. Apple's retesting the moving average. Look at Tesla, right? Tesla's down as one of the biggest losers, really driving down the overall NASDAQ market today. It was down 6.75%. Think about this. Instead of being super obsessive and trying to buy as many shares as you can on buying the dip, don't overcomplicate it. Cherry pick 1 to 3 stocks that you really see value in and just buy one share. Make sure it's something that you can afford. And that's, again, this one's kind of a bad example because it's really expensive. But let's say that you trade with $1,000 and you buy one share of Apple. If you buy that one share, you're not going to be irrational. You're not doing it for the profit. You're doing it to prove it to yourself, to gain experience and to gain confidence. That's what it's about when you're just getting started. Our Learn Plan Profit team knows that's always, it's called the one share test buy. It's to prove it to yourself that you're not going to be irrational, that you're not going to focus on the profit or anything else. You're simply going to focus on the trade. You view and identify a cheap blue chip stock that's very bullish. You view it to be cheap. You buy one share and you wait for the recovery. Yeah, maybe you can buy a second share when you get confirmation of an uptrend, but you're not doing it for the profit, right? You'll probably make $8. That's good. Again, but it's the proof of concept. It gains experience and it gains confidence. And again, it's easier to manage, especially with that time aspect when things don't go according to plan right away. Let me know what you guys think about that. I just wanted to share, again, some insight on today's market performance and how I intend to approach it. Some people are freaking out because the market's pulling on back. Those are the people that probably didn't prepare. Our Learn Plan Profit team has no excuse. We prepared, we were aware of it. Now the market pulled on back. Now it's our time for our team to take action, buy the dip on the quality stocks that we see value in and make money as they recover. They don't need to recover soon. They don't need to recover right away. But when they do, we set those alerts and follow up with it when it makes sense. It's keeping trading simple. So again, if you guys want to join us for our live trading session, I trade live every single day. And again, it's exclusive to the Learn Plan Profit group. And that's that first link in the description. I really do appreciate you guys' time. Hope and wish you guys an amazing rest of your day. And like always, let's make sure that we end the year on a green note. Take it easy, team.